Okay, so what I'm technically talking to you about today is the 5 most common myths of international trade. These aren't going to be arranged in terms of the most common, but I think the 5, as I go through them, you'll agree, these are things that often come to mind when the common person talks about international trade. And the relevance, of course, to this topic of imperialism is that once you agree that free trade and the government just standing back when it comes to economic matters between different groups of people, once you agree that that would lead to disaster and impoverishment, and so, the government certainly has a role to protect our jobs, to promote our economic growth, to regulate trade when it comes to these insidious foreigners, that sort of mentality pretty soon leads to more aggressive tactics once you grant the government that freedom. So to the extent that those views are just plain wrong, let alone immoral and violations of abstract rights, it's worthwhile for us to go over them. So the first myth, it's a pretty simple one, we'll get through it very quickly, is just that right now we have free trade. Right? That I think a lot of people believe that President Bush is for free trade, and therefore, to the extent that you think the economy is in trouble right now, it's because of free trade. Paul Craig Roberts has been really on the bandwagon for this type of view, and he'll say things that he'll cite all these statistics to show you that, and I'm not putting words in his mouth, that we're going to be a third world nation in 20 years, and it's because of President Bush's free trade policies. So it's hard to know where to begin with a statement or a claim like that. So for one thing, the statistics, a lot of them are misleading, that I don't think the situation is nearly as bad. A second thing is we don't actually have free trade. And the third problem is if we did have free trade, it wouldn't be the cause of those problems. So there's like a triple negative involved, so I think that on net means he's still wrong. All right, so just another way to look at it, people talk about NAFTA. I believe NAFTA is literally, that document was over 1,000 pages long. Right? So if it were really a free trade document, if it were just going to say the U.S. and Mexico will have lower tariffs, I mean, forget about actually having free trade, but if it were just going to really roll back government, get government off our backs, government is the problem, not the solution, what the Republicans are going to bring us, right? You wouldn't think that document would be over 1,000 pages long. So it's really hard to argue with these people because the politicians that are allegedly on your side as a free trader, they talk the talk, and it's hard to say, okay, actually no, I'm for free trade, but I'm against the free trade agreement because it's not free trade, and so it gets really difficult to. And so, for example, if someone is against NAFTA because it destroys jobs, you have to say, well, you might be right, I'm not sure, but it's not free trade that's doing it. So it's really difficult, and if the politicians would just stop lying, it would make our jobs so much easier. All right, the next myth I'd like to address is a very common one, that trade deficits are bad. All right, you hear this all the time. I don't know what the reason is. An economist one time said that the single most difficult thing to teach undergraduates is the benefits of free trade and why protectionism is bad. And I found that to be the case when I was teaching at Hillsdale. In my macro classes, would just hammer for weeks as to all the different reasons that free trade is good, all the things that are just crazy about protectionism, listing 9 different ways to see how protectionism is silly. And then on the test, to the point where the students were just bored out of their minds, and yeah, we get it, let's go on. And then on the test, just as an exercise to see who was paying attention, I'd ask them to calculate the deficit. I'd say on a question, suppose that Americans buy 1,000 cars from Japan at $10,000 each, and the Japanese buy so many TVs from us, or vice versa. What would be the trade deficit or surplus? And one of my students put, we would have a $10 billion trade deficit with Japan, period, sucks, exclamation point. And so, for one thing, that wasn't a complete sentence, so I had to take points off of that. But you see what I'm saying, that even there, you would think, even if he believed it, just to keep me happy, that I was against that sort of thinking, that he would have kept it off. But he was so sure that a trade deficit was bad that he thought he'd throw that in there to let me know he knew it sucked. Okay, but let's, before we ponder just how silly the worry about trade deficits is, we should again be clear on what exactly is a trade deficit. And once you realize what it is, you can see just how crazy this is. So all it means if you have a trade deficit is that the group that you're talking about are buying, in terms of dollar expenditures or whatever the monetary unit is, that number in terms of their expenditures on the other group's goods is higher than their expenditures on your goods. But the thing that's tricky is you restrict it to certain types of expenditures. So usually in some cases it's just on merchandise goods, not even services, which is particularly strange. And then in other measures, when they talk about what's our trade deficit with Japan, they'll include the trading of services also. But so the idea is if we have a trade deficit with some country, that means that we're buying more of their goods and services than they are of ours. But again, it's narrowly defined. And so again, there's all sorts of ways to see why that's sort of an arbitrary, meaningless statistic. One way I try to bring the point home is to say, unless you're running your own business and you have all sorts of different paying customers, if you're just working for some company, I bet that you have a huge trade surplus with the city in which your job is located, and that you have a trade deficit with every other city in the world. All right, that if you, for example, occasionally go on vacation to a neighboring state, probably you have a huge trade deficit with that state, meaning you buy more goods and services from businesses located within those geographical boundaries than they buy of your services, whatever your job is. Whereas you probably have a huge trade surplus with the city in which you live because that's where your employer is. And so if every month, for example, you calculate and say, okay, I got this much of people buying my services who live in this region, namely your employer, and you get a number, and then you say, okay, let me add up how much money I spent on merchants in this city, and probably the number you got paid from your employer would be bigger than what you paid out, and so you'd have a trade surplus with that city. You did the same calculation with other neighboring regions, and you would have a trade deficit with them because more money's flowing out to them than they're flowing into your wallet, and so you're going to go bankrupt, right? You better start washing dishes every time you go to a restaurant outside of your city, because otherwise, you got to get rid of these trade deficits with the neighboring town. So if you start thinking about it like that, you say, okay, yeah, that's, it'd be silly to worry about trade deficits with various regions on an individual level, but that's all the trade deficit is when it comes to national levels. It's just you take those calculations for each person in the U.S. and add them all up, and then compared to, like, say, the Japanese, and add all those numbers up, and the net is the trade deficit vis-a-vis Japan. Okay, so that's one way to see it. Now, a sophisticated critic could come back and say, okay, but there's a flaw in your reasoning there, because chances are, unless you really are going bankrupt, you have a big enough trade surplus with your employer so that it balances out, and so on net your wealth is growing. But again, you got to be careful, because here the conventional trade statistics, they only look at certain things. So for example, just to give you an example to show why they could be misleading, let's say an American entrepreneur wants to start a new business, and let's say it's going to be, he needs to buy an office and equip it with computers and so on, and all the plugs and keyboards and everything that you need, office equipment, lighting and so forth that you need, copy machines for a new office. And let's suppose he needs to raise some capital for that, and so somebody in Japan has saved up money and wants to invest. And so the agreement they reach is, the American entrepreneur says, all right, if you lend me, he's got yen initially, he converts it into dollars, if you lend me $100,000 to start my business, I'm going to use that to buy all sorts of office equipment, maybe some of which he's buying from Japanese producers, and then in exchange you'll own, let's say, 50% of my company. All right, so you're not actually getting anything tangible from me today. I'm giving you stock certificates, or I'm giving you some sort of agreement that says you'll get 50% of any future net income that this firm generates. All right, so that transaction, once all is said and done, once he gets the money and then uses it to buy office equipment, some of which is from Japan, that would have increased the American trade deficit with Japan. Because if you think about it, there would have been, if you stand back and look at that, what would have happened, there would have been copy machines and computers flowing across the ocean from Japan to the United States, and there wouldn't have been any Japanese people buying U.S. products. And so they said, oh man, these profligate Americans are crazy. They're just, getting awash in debt here, that they're just buying goods today in promising away future earnings to pay for it. All right, so whereas if looking at the individual transaction, it doesn't seem that that's actually very short-sighted. It actually seems that's productive, and that's what we want people to do. All right, now, having said that, it doesn't mean anytime there's a trade deficit that that's a good thing, and I'm not saying that Americans shouldn't save more. I think probably they should, in terms of, if I want to be paternalistic and give people free advice that's worth the price that I'm charging for it, yeah, I would say you probably should save more, But it's not that a trade deficit per se is a signal of something bad. One last observation on trade deficits to try to see that is that if you go to these websites like Fred, the St. Louis Fed website, or these other, the BEA, and you look at the trade deficit over time and you see the graph, well, from your view, it look like this. And a lot of times, if you're familiar with these economic charts, they have columns that are shaded, and then it'll say in the legend, shaded regions indicate recession as defined by the BEA or whatever. And if you look at the trade deficit, that number, the line, typically goes down in those shaded regions and goes up when it's not shaded. So what that means is the trade deficit historically drops during recessions and rises during growth. And not only is that sort of irrelevant, but it's actually, that makes sense, because what happens for a sort of capital-intensive country like the United States is when our economy is booming, when people feel like they have more disposable income and they're willing to make more purchases, naturally that's what you would expect, is that we buy more manufactured goods and services, consumption services, from the rest of the world while they're investing more in the United States. Right? That happens during periods of growth. When there's a recession, people are afraid to spend. That's when we buy less from the rest of the world, and so the trade deficit drops. Okay, so it's not merely that the trade deficit is harmless. From a certain point of view, at least for capital-rich countries, a trade deficit might actually go hand in hand with economic growth. A lot of, I think, the reason that the trade deficit is considered to be a bad thing is just the term, deficit. But a trade deficit, the way these accounts are calculated, is equivalent to a capital surplus, a capital account surplus. Okay, a way to see it's easier if you think about it in terms of gold, because with different currencies changing against each other, that's one more thing you got to keep track of. But just imagine the world used gold, and foreigners wanted to invest more in U.S. companies than we wanted to invest in foreign companies on net. Well, what would that mean? That would mean more gold was flowing in than flowing out in terms of investment. And so that means Americans, if they wanted to, could use that gold to buy more manufactured goods and services from the rest of the world. And that could happen year after year, and it's not that all of a sudden we would run out of gold one day. Forget for the moment that gold isn't the measure of your wealth anyway, but even if it were, it's not that you would all of a sudden run out of gold. It's just that, on the manufactured and services side, your deficits were being counterbalanced by the fact that foreigners were investing more in your country. Okay, so the man on the street, if you said, do you think the U.S. should have a trade deficit or a surplus? He'd say, a surplus. And then if you said, okay, and would you prefer that foreigners invested more capital in here, or that on net capital was flowing out of our country? He'd say, I want capital flowing in. Well, you can't have both at the same time. All right, so you can pick one or the other, but you can't have a net trade deficit or net trade surplus and a capital account surplus. That's an accounting impossibility. All right, so I propose that instead of calling it a trade deficit, we should call it a capital account surplus. And then people say, no, the capital account surplus is higher this month. And no, people would be happy that the capital account surplus is higher, and so maybe just that change in terminology would help. Okay, moving along, the third myth is that a lot of people think trade only helps the poorer countries, so that there's two countries trading, and I think most people would admit, okay, somebody's better off when people voluntarily trade things, but it's the poorer party, and that the rich country is somehow worse off. I think a good illustration of this viewpoint was when Pat Buchanan I think it was when he was running for president the first time, and I think it was when he was still on Crossfire, or at least a frequent guest on that show, and he was denouncing NAFTA, and again, it was difficult because I agreed with him that NAFTA was bad, but not for his reasoning behind it. And I think it might have been Michael Kinsley, I was glad that he tried to really nail Buchanan down on the point, and he said, okay, you're right, there's all these environmental regulations, and it's conceding sovereignty to these international bodies, but forget all of that. Just suppose it really were a pure free trade document. Would you support it? And Buchanan paused, and they said, no, I wouldn't, because it would merge our economy with Mexico's, and that would lower American living standards. All right, so I really think he encapsulated there this fear people have. They think that having a wall between us, if just an imaginary wall in terms of economic policy, between us and really poor countries somehow shields us from their poverty, and it keeps us richer. Right? There's an idea that there's a certain amount of heat in the world, and if we got to keep it in. If we mix with a really cold country, that there's going to be a leveling out. And I think that's the mentality. Now, there's, again, with the time I have, I want to leave some time at the end for question and answer. I can't get into it too much, but just a few ways to see why that's silly. If just on an individual level, can you imagine you're talking with your friend who's a lawyer, and You say, hey, you want to go to Taco Bell? And he says, no, sorry, I can't go in there. He goes, why? Do you know what the average wage of the people in there is? Right now I make $180,000 a year. If I go in there, my salary might get cut in half. Right? Okay, so we can see how that's silly, but so how is that any different from, let's say, Mexicans are poorer than we are. If we trade with them, it's going to pull down our wages. All right? Now, and I don't know this because I'm a good imperialist American that I have been to very few foreign countries. I can't even find Kuwait on a map. And so I haven't been abroad, and I'm just curious, maybe some of you later on can enlighten me. Is it the case that in truly poor countries, are they all ardent free traders? Like, do they have the same economic fallacies we do, but they think, since we're poor, why don't we screw all these rich countries by trading with them, and like suck some of their wealth? I don't know. My guess is probably since they're poor and backward that they have bad economic ideas, and they're probably afraid of free trade as well. And you could get into it just to give you a hint as to, okay, we can see the absurdity in the view, but what actually is wrong with it? It's that it's not just low wages, for example. It's not that, the reason, if we allow Mexican firms to send us products, since they can pay their workers so little, therefore our wages all have to sink. It's not just the pure wage level, it's also the productivity. And so if our workers are twice as productive as an average Mexican worker, let's say in some particular occupation, well then it doesn't mean that we have to therefore get paid the same. That means we can get paid twice as much, the U.S. worker, as that worker, in order to remain competitive. All right, so it's precisely because U.S. productivity is high that our wages are higher, and that's why our workers get paid more. That's why we have a higher standard of living. All right, it's not because we have tariffs that allow us to maintain these high wages. All right, so that's one hint as to what's ultimately wrong with that view. Okay, moving along, the fourth fallacy or myth that I want to talk about is probably, it's related to what I was just mentioning, and that's that free trade destroys jobs. All right, so this is probably the single biggest objection people have, the single biggest fear. And again, economists have just spent so much time trying to show all the different reasons that this mentality is wrong. I'll just summarize some of the more popular arguments. So again, an easy way to do it is to just use a reductio ad absurdum and just say, okay, well, let's put it on the individual level. Does it help, suppose you said in your family, you say, okay, in our family we're going to have protectionism, we're going to create jobs here in our household, and so, you thought you were going to get your oil changed? No, you're not. Have your sister do it, because she needs employment. All right? Oh, okay. And then, you thought you were going to run to the supermarket and we're going to reduce our cash balances, have a trade deficit with the grocery store? I don't think so. Why don't you grow tomatoes in the backyard? Why don't we do it here at home and boost jobs for the family? Right? And so, don't go buy a dress, make it here. Right? So if you think about it in the household level, of course, that's crazy. You'd just be reduced to utter poverty, but you'd be employed. You'd be really busy. Right? There would be no shortage of work. You could find work. All right? So you wouldn't be unemployed. That would be good. But, okay, so you see the point there. And then you could expand it. It wouldn't be as absurd to do it, to have people say, okay, what about our state? Right, what if Alabama had high tariff barriers because we don't want to lose jobs to Texas? Right, things like that. And people, yeah, okay. But then for some reason, once we draw that boundary around the U.S., all of a sudden it seems different. And part of it, I think, is just pure, I hate to use the term racism, or I don't know what you call it, xenophobia, just because that's such a loaded term and people throw it around a lot. But I think a lot of it really is, I don't mind losing jobs to somebody in Texas, but I don't want to lose a job to a Mexican. That would really annoy me. But it's okay, if I'm unemployed because of a guy in Florida, that doesn't bother me as much. So I think it's not so much the inconsistency in the economics. I think it's more the value system that it's okay if it's just like when you see the news from Iraq and it's like 100 people died and an American got his arm hurt. It's like, oh man, that was a bad day. Okay, I should probably move on. Another way of seeing, another popular, very famous illustration of this idea of how silly it is to worry about free trade destroying jobs. Bastiat had a really famous article or a piece called "The Petition of the Candle Makers," and here, just for those of you who haven't heard it, it was a satirical piece, and he was pretending that he was representing the candle makers, the people who made candles in France, and he was writing to the the French legislature, I imagine, and was saying that we had this unfair competition from this unscrupulous adversary that we can't possibly compete against. It's namely the sun, and so what we propose is that you make it illegal for people to have their blinds open during the day, that if everyone had to shut the shutters and so forth and keep things dark, then people of France would have to buy more candles, and look at all the untold benefits that would have. It would boost employment in our industry. We would spend our money on other industries. It would be a spillover effect, and everything would be great. We'd create so many jobs and so on. So you can see where he's going with that, and everyone can kind of say, okay, yeah, that would be crazy to turn down the free light from the sun. The really cheap suns, the sun doesn't earn much in wages to produce that for us. It would be crazy to turn down those cheap imports of photons in terms of domestically produced light, right? That would be dumb. And by the same token, then, if the Japanese are willing to sell us really cheap cars and it would cost us more to make the same thing here of comparable quality, well, it would be just as silly, well, not as silly, but it would be somewhat silly to turn down that because of their natural advantages. Or it would be silly. You technically could probably grow oranges in Alaska. You could have greenhouses and so on, but they'd be very expensive. So instead of doing that, people living in Alaska should just import them from Florida or California, where there's natural advantages to growing them there. All right, so that's another typical argument that economists use. And the last one I'll mention was actually by David. I think David Friedman originated it. And it's a clever little way to think about it. He said, look, the typical argument for why do we need tariffs on Japanese cars, that's a popular one, is to save jobs in Detroit, right? That there's the big three, and if we have tariffs, it'll protect jobs for Americans in Detroit. And so Friedman said, okay, that's one way to look at it, but look, there's actually two technologies for creating cars. One is you have people show up at plants in Detroit, they have steel and rubber come in and all these other things, and they churn out cars. That's one technology we have. Another technology is you have farmers in Iowa and other states, they grow corn and other types of goods like that. They put it on a boat, they send it over to Japan, a little time passes, and then the boat comes back and those crops have turned into cars. All right, and we get them that way. And so from a technological point of view, from an economic point of view, I mean, we know that's not really what's happening. It's not that they're physically turning into, it's that they're being traded for. But from a technological point of view, suppose that really were what happened. Suppose there was something magical over that literally turned the rice into cars or the corn into cars, and they came back. Well, then you would realize, he says, that putting a tariff in place, all that does is penalize American jobs in farming as opposed to American jobs in the other technology of making cars. All right, so that's one way to look at it. And what he's getting at there is that when you put on a tariff and you prevent foreigners from selling products to American consumers, that means they have less purchasing power with which to buy products from American exporters. And again, it gets tricky with fiat currencies, so it's easier if you think about it in terms of gold. If we were all on a gold standard, it wouldn't change the issue, just easier to think about it, and we put up high tariff barriers so that American consumers can send less gold to foreign producers, well, then that means they have less gold to then spend on the products of American exporters. All right, another way economists like to talk about is that ultimately the way a country pays for its imports is through exports. All right, that you think about the rest of the world, why are they sending us all these goodies? Why are they sending us TVs and cars and so forth? It's ultimately because we're sending something to them in return. It's not just because they're stupid, right? It's that they are, whether it's they're getting equity in American firms or whether they're getting other products and services, ultimately the reason these foreigners are sending us products is that we must be sending them something. So if you artificially hamper how many products they can send us, then that interferes with the business of American exporters. Okay, and then finally, the last thing, and then there's a few minutes for question and answer. The last one I'll talk about is that free trade creates jobs, right? So here I'll take a little dig at the pro-free trade crowd, that a lot of times, you spend so much time saying how free trade doesn't destroy jobs, then a lot of times advocates of free trade will say, look at, NAFTA from this date to this created, 600,000 new jobs, and that, free trade is the way to boost us, to grow the economy, and they'll talk using this language. And strictly speaking, that's not quite accurate. Free trade really isn't about jobs per se. It's about real wages. That as long as wages can float freely, anybody can get a job. Right? It's not an issue about creating jobs. There's always something that an extra person can do. That if someone needs work, it's not as if we're just going to be satiated and there's nothing that anybody can do, that no one can find work. There's always something you can do. So whether we have tariffs or perfectly free trade, everybody could be employed so long as wages are free to move, so that everyone can be hired who wants to work at the prevailing wage rate. So in that sense, free trade really doesn't create jobs. It just means that jobs would tend to pay more because people will go to where they have the comparative advantage. All right, now there's a little caveat there. To the extent that actually we don't have a perfectly free labor market, that there's Social Security, there's all these deadweight costs imposed, so that you actually have to have a minimum productivity before it's worthwhile for anybody to hire you. In that sense, if free trade raises everyone's productivity, more people get over that minimum bar. But I think a lot of free trade economists, that's not what they mean when they say, oh, free trade creates jobs. I think they're just being sloppy and want to give a nice soundbite to, for the Republican who claims to be for free trade. So with that optimistic note, I will end, and I think I've got like 2 minutes if anyone wants to ask a question. Yes?
You were right when you said people from poor countries might oppose free trade. I had a student from Egypt about 20 years ago tell me they could not afford free trade because they couldn't compete with the highly productive American workers.
Well, yeah, that's interesting.
You were exactly on target.
Does anyone else want to compliment me? Yes, sir.
Could you comment on our growing deficit with China in terms of the massive amounts of dollars we're shipping over there and the massive amounts of goods they're shipping us? Is it fair to say that one of us needs the other more than the other?
Okay, yeah, that's a legitimate question, and again, it's hard to talk about these things, but it makes the appearance that I'm saying, oh, everything's fine and there's not going to be any problems. And no, it's entirely possible that the dollar could fall next week and that we could be thrown into a huge recession. The point I would emphasize, though, is if that does happen, it's not because, oh, we had free trade and that led to all these imbalances. As far as China goes, yes, my understanding, and I don't claim to be an expert, is that the Chinese government is certainly using non-laissez-faire means to accumulate huge reserves of dollars, that they're keeping their currency artificially cheap in terms of the international market, so that favors their exporters. All right, so it's basically just the Chinese government is impoverishing its own people to favor certain exporters. Now, it's not a good thing in terms of their own people, but in the sense, is it hurting us? I don't think so, at least in the short term. If the Chinese government wants to just use its equivalent of tax dollars or slave labor to send us free goods, that doesn't make us poor. Like if they're sending us stuff that's artificially cheap, again, that we're getting presents, that's not actually hurting us, but it's to the extent that people become complacent and rely on that would be a bad thing. But again, it's not something government policies are going to alter. That's just, we might as well get the cheap goods while we can, and then just be aware that situation might change pretty soon.
Okay, thank you very much, Bob.